Hello, dear students. Today we are going to discuss an illustration on issue of shares. Let us begin. This is an illustration on issue of shares at par. See, certain things we have already discussed and the theoretical concepts which you will get for 2 marks. It has already posted in the videos like in shorts you can see, and you can expect those questions for 2 marks in your exam. So let us start with the question here. Ruby Company Limited, with a registered capital of 1 lakh rupees, issued 5,000 equity shares of 10 rupees each. We are talking about here the issue of shares on installment basis. So where we have already seen three types of three different stages we have seen, that is application stage, allotment stage and call stage. Here when we are talking 10 rupees, they have divided in different stages. 2 rupees they are receiving on application, and you can see they are receiving 2 rupees on allotment, and the calls they are doing two calls. One is first call and one more is final call. So 3 rupees they are receiving on first call, and another 3 rupees, the remaining 3 rupees they are receiving on final call. Total together they are receiving 10 rupees. Okay. So all the shares were subscribed and the money duly received except the first call on 500 shares and the final call on 1000 shares. Give the journal entry. So this is a simple problem which you may get for 8 marks. Now here they have received the amount, but they have not received the overall amount. During first call for 500 shares they are not receiving the amount. See, totally they have to receive for all 5,000 shares, but for 500 shares they have not received the amount. That means 3 rupees when they are calling for 5,000 shares, in that only 4 till 4,500 shares they are receiving the amount, but for another 500 shares they are not receiving the amount. So that will be calls in arrears. Okay, again they are not receiving for 1,000 shares. So that means for 4,000 shares only they are receiving the account. So bank account debtor will be only till 4,000 shares. So for 1,000 shares they are not receiving the amount. So for that also you will get in arrears entry. Remember, for each stage you will get two journal entries. Okay. So if any additional transactions are there, then your journal entry will be extra. So for application stage, we are going to give two journal entries, as I said. So here the first journal entry is for application money received. Right? For application money received. So here whenever the application money is received, the company is going to receive the amount. So as the company is receiving the amount, they will write bank account debtor, from where they are receiving this amount, from share application account. So bank account debtor to share application account. So being share application money received. So this we will do. So how much is the amount? Here we will write 10,000 rupees. Why 10,000 rupees? See, learning the journal entries is easy. The same journal entries again and again it will repeat. Only the thing you have to concentrate on the calculations. Why these are all the calculations we are doing. These things you have to see here. So when 10,000 rupees we have taken. Why 10,000 rupees? Because it is 5,000 equity shares of how much rupees each? 2 rupees only per share we are receiving. That means it is 5,000 multiplied by 2, that is 10,000 we are receiving. This is one. So this is for received, and that will not be kept for share application. That will be going to transfer as a share capital account. So now for that we are going to give the entry. Application stage, two entries we are going to give. One is for receiving the money and for transferring that money to share capital. Only two. So the money whatever we have received, that we are transferring to the share capital account. This is clear. So this is the concept. And the next thing we have is allotment. 2 rupees they are receiving on allotment. So what will be the journal entry here? You can see the journal entry will be share allotment account debtor to share capital account. So now company is allotting the shares to the shareholders. During that period, how much allotment they have done? That period they are receiving 2 rupees per share, right? For 2 rupees per share they are allotting. So share allotment account debtor to share capital account. Okay. So again here 2 rupees 5,000 into 2 10,000. So this is what we have already taken, 5,000 into 2, 5,000 into 2, 5,000 into 2. This is what we have taken. And this money, just in the first case, we are showing from the allotment to share capital, the amount has to be transferred, which is due. We are not telling it has received. So amount is due. How much we have to receive? We have to receive 10,000 rupees from total shares. And here now the second entry we are giving as bank account debtor share allotment account. That means whatever the amount was due, this we have received now. So what was the amount due? 10,000 rupees. So that 10,000 rupees we are receiving. So the allotment stage, two entries we have done. So four entries, two for application, two for allotment done. The next thing we are going to talk is about call stage. As I said, for call stage also we should have two entries. Here little calculations are there, you can see. When talking about the call stage, 3 rupees they are receiving on first call. So first call, two entries, and again when we are giving the same entries for final calls we have to give. See, so here 3 rupees on first call. 3 rupees they are receiving on first call. 5,000 equity shares they have. So 5,000 equity shares into 3. That is 15,000 they are receiving. So as I said, first entry will be for money due and the second entry will be for money received. So what the amount they are expecting to receive from the first call is 15,000. 3 rupees they have to receive for 5,000 equity shares. 5,000. What happened here? All the shares were subscribed and money duly received except the first call on 500 shares. So for 500 shares, they are not receiving the amount. So that means the company is receiving the amount only for 4,500 shares. Only for 4,500 shares. 4,500 shares multiplied by 3 rupee per share if you are doing. So this comes to 13,500 rupees. Okay, 13,500 rupees for this they are receiving. And what happened now? How many shares they are not receiving? 500 shares they are not receiving. So 500 shares multiplied by 3 rupees. So you can consider this 500 shares multiplied by 3 rupees is nothing but 1,500 rupees. Or the balance also you can do 15,000 minus 13,500. The balance is 1,500. 1,500 rupees they are not receiving. So that 1,500 rupees they considered as a calls in arrears. So they are not cancelling the share. Remember this, calls in arrears. They may get in future, may not. They have not yet cancelled the shares. Okay, so that in the first call money received except 500 shares. So this is how we need to show the calculation when the calls in arrears are there in the questions. Okay, so the same calculations is there for the final call also. You can see here. Yes, what will be the journal entry again? When we take the share final call account debtor, yes, the share final call account debtor to share capital account, correct? Here also they are receiving the 3 rupees. This is a money due. We are expecting to receive again 15,000 rupees. In that final call also, we are not receiving the amount for 1,000 shares. That means bank account we have taken for 12,000 rupees. This bank account is only for 4,000 shares and remaining 1,000 shares multiplied by 3. Okay, that is 3,000 rupees we have not received. So that we are going to transfer it to calls in arrears. Okay, we are considering it as calls in arrears. 12,000 is a bank account, 3,000 calls in arrears, and total share final call account is 15,000. So here being final call money received except how many shares? 1,000 shares. This is how you have to give the journal entries. Again, this is how you have to calculate in issue of shares at par. In the next video to discuss the illustration based on the securities premium and calls in arrears, calls in advance also will be going to consider. Okay. So those who have not yet subscribed, please do subscribe so that you can get the updated videos relating to this. Thank you.